Rate eased to 20.12% in August from 21.88% in July. The National Bureau of Statistics said this early on Monday. The Statistics Office said the August 2025 headline inflation rate decreased by 1.76% compared to the July 2025 headline inflation figures. Inflation indicators compares prices of goods and services over 12 months. A decline does not necessarily imply a reduction in prices. Instead, it shows the rate of price increase has fallen compared to previous month. On a year-on-year basis, the Bureau says the headline inflation rate was 12.03%, lower than the rate recorded in August 2024. This, it said, shows that the headline inflation rate year-on-year basis decreased in August 2025 compared to the same month in the preceding year, and that means August 2024, though with a different base year, November 2029, 100. The MBS said on a month-on-month basis, the headline inflation rate in August was 0.74% and 1.25% lower than the rate recorded in July 2025. Let's continue our conversation around inflation, which we started on Tuesday. My guest today is Mr. Robert Omotunde. He is an investment man. Thank you so much for your time.
Thank you for having me. My pleasure.
Yes, I think we should start with the reduction on the month-on-month. There's a bit of reduction with regards to that, because that has been my worry since we started this decline.
Well, I think that it's remarkable. It's not just a bit, 1.25% differential from what we had. I mean, I think if you look at July month-on-month increase, it was about 1.99. And here we are talking about, you know, a 0.74. In terms of a month-to-month increase. Yes, that month-to-month is impressive, given all that the economy has been grappling with, you know, in terms of managing inflation, expectation, and the likes. But of course, we will also link it back to the rebasing exercise, you know, which happened earlier in the year. You will recall that when that rebasing exercise happened, we had a month-on-month increase of 10%. It almost has never happened, you know, in the history of the country. But I feel that would have been some mathematical adjustment that would have resulted into that, because month-on-month increase of 10% in inflation was inconceivable, you know. But then now you are beginning to see that gradual moderation to 0.74 as we have it in the month of August. We can have that pace sustained, you know. But again, if you look at the history of month-on-month inflation in Nigeria, that 0.74 is about the threshold of the lowest you will see in history. So perhaps we are able to maintain that level below the 1% level. Then inflation can then follow that lower trajectory path coming into the end of the year. And that is if there are no new pressure points that we have to deal with. You know, again, our issues are, you know, they are a compendium of issues you have to deal with. But one positive thing that is working for us right now is the exchange rate that, you know, is stabilizing. Not just stabilizing, it's also moderating. Today, we are talking about exchange rate at around 1,500, 1,525. That's remarkable compared to where we started the year from, you know. And again, when you compare that to where we started, should I say, when this government came in, you know, it looks like we are getting better. We are getting better. So the point now is, how sustainable is this level of exchange rate that we are experiencing at the moment? And those are the issues that the government now have to deal with. And I must tell you that those issues are real, you know, and there are still pressure points to deal with. The most important factor as exchange rate relates to, you know, because some people will argue that the moderation we are seeing now is tied to the fact that exchange rate is now moderating, you know, we're having some appreciation. But the fact is that if you get into the market space, most of the prices that were affected by higher exchange rates, you know, higher food prices and the likes, they may have not significantly been affected. Do you understand? So, and I'm even picking it from the you know, exchange rate story, which is that the impact of exchange rate on prices have not really been, you know, adjusted in this level of inflation that we are seeing. Because if that happens, you will see a much more, you know, decline in not just a month-on-month, but a headline inflation. Because, of course, there is a behavioral pattern of Nigerians, especially to prices, right? People, you know, pricing in Nigeria it doesn't follow a science per se, you know, because sometimes you will wonder if exchange rate has depreciated by 50%, and then you get to a store, and then in that store, the price of an item has increased by 70%. By what science can you explain that? Because somebody would say, oh, prices are going up, things are higher, and then somebody fixes a margin unchallenged, no price control. You know, everything is just happening arbitrarily like that. And when there is an adjustment, as in this case, the argument you will hear is that we stocked up when exchange rate was 1,000. When it was high. 800.
That's always been the argument in Nigeria. Things never come down when they go up.
So that's the thing. So, and those are the areas that we now need to deal with. That, the government may not have much. Like I said, it's a behavioral pattern of Nigerians and how we address, you know, things that have to do with pricing. But I think the benefits we are seeing majorly now is coming from food prices. As you can see, you see that in the analysis, food inflation also declined, you know, almost to the same tone that you saw that decline in headline inflation. So which is to tell you that as I'm against, you know, the argument that exchange rate appreciation is what has brought us here. Because for exchange rate, we have not seen the full benefit. When we see it, we will have better results as far as inflation is concerned. But it must be said that this month-on-month decline is remarkable, and hoping that we can sustain that trajectory into the future.
Some key inflation drivers are food and alcoholic beverage, restaurants and accommodation services, transport and energy costs.
Yes.
These are some of the stuff that we've seen.
I heard your conversation, you know, with the professional on energy. The truth is that the more we can, you know, manage that energy input into the costs structure of most businesses, the better we can put a rein on headline inflation. Because think about it, for most businesses, I mean, and the doctor made mention of your studio, for example. If you were to price, you know, apart from the professionalism that goes into what you do, you will see that energy costs, you know, will be part of your consideration for pricing. True. And that is how it cuts across most activities, most economic activities you will find. You understand? In transportation is even major, because you mentioned cost of transportation, you know, and some of the drivers of it. Now, the point is that if we are able to manage our energy to the extent that it's not just available, but it's also efficiently priced, such that pricing becomes something that, you know, it's not really a pressure point for the overall cost structure, then we are doing something right. But how do you price energy appropriately when there is scarcity? Because that's what you see. You know, the whole idea of band A, band B, band is to prioritize. So there's scarcity. If you must get the power, then you will pay higher. I mean, that's the whole idea, because otherwise, what sense does it make? The same you know, generation cost goes into what power comes to band A or what power comes to band B. But it's just about priority, you know, and prioritizing. So the point is that availability, you know, which is what we are talking about. You know, power is another kettle of fish that if we want to discuss, we've talked about disaggregating that centralization of the grid, which is one of the major problems that the country is facing. You know, we're saying that if we continue to produce power at different power stations, right, scattered across the country, and we are transmitting them, you know, upscaling and transmitting through this so-called, you know, our grid, you know, which seems like some greed are in the grid, you know. So if we keep transmitting like that, right, and then to distribute, for instance, I've made that analogy before. If you are in Lagos, right, there is Egmi power plant in Lagos. Now imagine Egmi producing and then stepping up to send to a centralization, you know, location somewhere outside of Lagos.
Far
outside
Lagos.
Yes, Osun State probably, you know, Shogbo. And then from there, you then transmit again and then bring it back. The wastages, that's what, you know, the technicians call ATC and C losses. You know, the aggregate technical, commercial, and, you know, and collection losses. I mean, we have been able to even solve collection losses problem to a very large extent, because we are metering people, and then people can now pay for what they use, and the laws are now stiffer, you know, on energy theft and the likes of it, which then means that we have solved that problem. Kudos to the government. What we now need to deal with is availability of energy, Because if people are ready to pay for the energy, why don't we make it available? Look at the, the few manufacturing companies that we have in the country. They run off-grid, most of them. But then imagine that the grid is stable enough to supply the power, right? And because of usage and frequency of supply, the tendency is that prices may be lower. And then it eventually feeds into your inflation. But like I said, all of these issues that I have explained, they are mostly structural. They are within, they are outside the ambit of the powers of the Central Bank of Nigeria, who is saddled with the responsibility of managing monetary policy in the country. So their own is to see the instrumentality of tools, economic tools, what we say, monetary policy tools, that they can use to manage where the fiscal tools are failing. But the thing now is that what we even need are beyond monetary and fiscal tools. We actually need restructuring of the economy and efforts put in place, especially from the fiscal side, to ensure that not only do we drive investment into that space. Number one, regulation is one thing. Yeah. If your regulation is stifling to investment, then you need to review it. And I think the doctor mentioned it. But because, again, the reason why we're analyzing all of this is because if we don't solve power problem, it's a contributor to headline inflation. And the moment you have inflation, it makes a mess of everything that the economy has to, to offer. Because your economy, look at now, we're growing at around 3%. This was an economy that would comfortably grow some 15 years ago. We would grow at 7, 6%, and sometimes 8%. And I dare say that the potential of the economy to grow is still there. Perhaps that's why the president is saying, he wants to grow the economy to $1 trillion. There is a potential for the economy to go beyond even $1 trillion. But then we can't get there if we are paying lip service to all those things that we need to do to get the economy to that level. Point. So if the government is really serious about this $1 trillion economy, the things to do are here and within us. And this inflation figure that we're analyzing now, it gives us an insight into what the government needs to do. Because the moment you can structurally solve inflation problem, you have inadvertently impacted on the growth potential of the country. Yeah. And once you have done that, then $1 trillion becomes easy for us to achieve. Because again, if you look at how we are falling from about $500 billion in 2013, when we had the rebasing exercise, and now we are talking about $240 billion. Yeah. Look at it, that has halved. So it means that the economy was at half of $1 trillion some 10 years ago. Think about it. It's sad. A lot of work really needs to be done. A lot of work needs to be done.
Let's look at some drivers of disinflation here now. Base effects, I think you've touched on that. Stabilization of the foreign exchange market, improved agricultural production. Let's talk about agriculture and harvest season, what we expect. Do you think that would impact pricing to one way or the other?
To some extent, it will, because, we still have these seasonality factors affecting our inflation. There are some crops that are more available, once the rainy season has subsided and then you have some harvest season coming, historically that has always impacted on Nigeria's inflation. But go and check, the world over, especially countries that are industrializing, right? The way to treat agricultural blessings, so to speak, is to enhance them so that you can derive all the most benefit from them. How do I mean? We don't have to wait for the rainy season all the time. The reason why we are, talking about rainy season factors is because most farmers now are mostly, in the informal sector. Let me put it that way. So we have peasant farmers who are, trying to grow commercial, but because there's no investment, they're only doing it at the beat. They have to wait for the natural rainfall, no irrigation, and no issues around drainage if there are, flooding on their farm, and then coupled with all of the insecurity issues that, some of them have to deal with, right? So definitely we will see some impact on inflation, but we need to move away from that seasonality factors to more deliberate agriculture, where if you go to some countries in Europe, if you are in a farm, right? I mean, look at the Russia-Ukraine war and the crisis it brought on Ukraine particularly, and how it impacted on wheat prices globally. That's a country that I was able to, detect their competitive advantage in wheat farming, right? So what can we say is ours in Nigeria once we have not done them at a much more industrialized scale to supply the world, right? We've just been privileged, by virtue of our origin or of our foundation. That's why we say have some agricultural things still driving majorly some aspects of our economy. But then we need to move away from that primary stage of agriculture to a much more industrialized stage, and that way we can then improve the number. Because for me, what inflation does is not just for us to analyze the price. We can see the problems of Nigeria in these figures.
Yes.
You can see it. Just look at it. If you look at it overall, so you can see that, okay, how do I solve this problem? Because when you see the components of, of the price pressures that we're seeing, you can see the problems clearly and say, okay, how do I address this? And I think that's what the government should be doing with these figures. It's not just enough for us to applaud and say, oh, inflation is now 20%, right, more or less, compared to where we were coming from. Don't forget, there's been rebasing exercise.
That's very key.
Justified anyways, because, of course, when we talk about rebasing, is to the degree that it helps to properly capture. For instance, if you spent 1,000 naira on food 5 years ago, you're no longer spending 1,000 naira. The same you won't spend 1,000 naira on. So, and if your income has not improved substantially, it then means that you are probably allocating more of your income to food.
Feeding,
Yes, that's what the rebasing exercise has done, which is justified, is the best thing to have done, but in this circumstance. But what we are saying is that we shouldn't lose sight of the fact that the rebasing exercise also contributed to what we are seeing at the moment. So overall, a lot of work still needs to be done.
Indeed. Policy priorities now. You've talked about maintaining stability, bottleneck. What I want us to talk about now is the policy coordination and, looking at the monetary and the fiscal. The next MPR is coming. Many are saying that there might not likely be any shift, despite the fact that we are doing 20% now with this. The Fed, we're expecting anything to happen from the U.S. There might be a shift. And everyone is looking out because Trump has been on Jerome Powell's, and we don't know what's going to happen with regards to that. But what do you think? Do you think that could affect CBN's position?
I like the disposition of the Monetary Policy Authority at the moment. I think when the governor came in, he made it clear that he is here to stabilize prices, and he's doing everything. And if you look at the ingenious ways in which the central bank is going about it, it's commendable, I must say. Right now, Nigeria's inflation historically has always been tied to what goes on with exchange rates. So, and the central bank is able to manage that to the degree that we are now having stability. I mean, just before this program started, the market was reading that the official window is even higher in price than the street market. And that was true. That was the case. That was the case we had in the early 2017. When the central bank shifted towards, I mean,
if to even change in the bank now.
So if you notice that before COVID, the parallel market and the official window were almost at unison. Sometimes the official window is more expensive than the parallel market. And that's what we are talking about. So the central bank has done well in that regard. But in terms of policy coordination, right? Like I said, the monetary authority is doing it right. The fiscal authority is also pursuing its own agenda. But oftentimes what happens is that it looks like sometimes what happens at the fiscal side is antithetical to what is happening at the monetary side. Because the monetary is trying to say, okay, I'm going to put a rein on inflation, I'm going to quarantine flows from the market as much as possible, which is why the central bank is still issuing OMO at close to about 30% yield in the market where Treasury bills yield has fallen as low as below 20%.
Far below.
Far below 20%. Now, no, I'm not talking about the yield. The discount rate is around 15, 16, 17%. Yeah. But the yield is still around 19, 20%.
19, 20%.
Yes. But then compare that to OMO rates, which is, or OMO yields, which is now closer to about 30%. So why the central bank is doing that, the government is also spending. So, and as you have, we call it contractionary and expansionary monetary policy. We also have contractionary and expansionary fiscal policy. So if the central bank is quarantining flows from the system by way of OMO and taking money out of circulation, and the government is spending by way of expenditure, then you see that it's like it's counterbalancing whatever the monetary authority is doing. So from the monetary side, it's like the effect is nil. let's just be happy that whatever mistakes the fiscal authority makes, the monetary authority will correct it, which then means that what we need fundamentally to shift from the level of inflation that we find ourselves now is still structural.
Yeah.
Because whatever monetary authority will do, they won't do miracles. They will only solve the problems created by the aggregate, actions of all the economic actors. So that said, when you now compare that to what is happening globally, in fact, today's Fed meeting looks like inflation, rate cut about 25 basis points in the pocket already. Yeah. In fact, what the market is now discussing is what will be the direction. Because that's one thing that the developed economies do so well. They won't just, take an action now. They give you guidance as to what to expect into the future. And I think those are the lessons the central bank will be taking as well. To say, as much as you're doing well now, let's look at what can we plan with? What are your policy choices or options for the future so that the market can begin to think like you think? Do you understand what I'm saying? So because right now, we are seeing it working well. I belong to the financial market space where, it's been a good year from yield perspective because we've seen yields drop. Some investors took position at a very high yield and having to cash out, when yields are falling. We don't like a situation where yields are just rising, right? Because if yields are just rising, you don't get to make money as much. You see what I mean? But then when there is volatility of that yield, within the ambit of what is allowable, under the financial market structure, then everybody is happy. And that is what I'm saying about, policy actions and direction for the future, so that not just the government can plan for their borrowing, because government is still borrowing. Yeah, of course. From the domestic market, bonds auction gets issued every month, treasury bills every fortnight. So that is still ongoing. But then what the central bank is also doing somehow is helping the government to also reduce their cost of borrowing. So overall, there still have to be consistent monitoring of policies from the fiscal side as well as the monetary for harmony to continue to happen. Because it is by then the overall effect is felt on the economy.
It's a good way to live it. Interesting conversation. I know we can go on and on. It's that's our time. Thank you so much. Mr. Robert Omotunde is an investment manager. Thank you for coming into the studio. We appreciate this.
Thank you.
All right, then, before we wrap up the show, it's time to review trading activities at the exchange. And joining me is an investment banker and stockbroker, Mr. Tajudeen Olayinka. Mr. Olayinka, good afternoon and thank you